Hey, what's up, guys? It is Jeff Trevarthen, Jeff the Mortgage Bro. Thanks so much for watching. I really appreciate when you guys watch my channel here. Hey, this is a cool analysis that I've done multiple times for lots of clients. This is an appraisal gap analysis. And so, what I want you to use this for is to help you figure out what it is that you need to do if an appraisal comes in low. Now, a lot of people out there will panic. Oh my gosh, I can't figure this out. There's no way to do this. But if you've got someone like myself, as well as many other mortgage planners, mortgage advisors across the United States on your side, you're definitely going to be able to figure this out. And it shouldn't even really be that big of a deal to be able to figure this out. Okay. So if you take a look at the summary section here, this is a case study. This is an example of a property that I financed in Sacramento, California. In this case, the contract price was $500,000, and this borrower was maintaining a 20% down payment going forward. So you can see in the summary section here in the first column, $500,000 purchase price, loan amount was $400,000, 7.375% interest rate, and you can see the monthly payment was $27.62 per month, and the cash to close, or the down payment in this case, is $100,000. Now, just for the sake of this analysis, I didn't put any taxes and insurance in there as part of your monthly payment. I didn't put any closing costs in there. And the reason that I didn't put all that stuff in there is just so that we can actually see what the dollar figures actually look like themselves. Okay. So contract price, 500K, putting 20% down, 27.62 per month is your monthly payment. $100,000 is the cash to close in this example. Okay. The second column over, in this particular scenario, there's two things we can do when the appraisal comes in low. And this doesn't matter. This matters obviously if you're looking at a lower price property or a higher price property. The numbers and the dollar figures are going to be bigger. But in this example, the appraisal came in $10,000 less. So appraisal comes in at $490, and in this case, the borrower you could maintain 20% down still in this instance. Now remember, the lenders are going to lend on the lower of the appraised value or the purchase price. So in this example, since the appraisal came in low at 490, that's the number that we have to go off of now, even though we still maintain a contract price of 500,000. Now that's to say that there is no negotiation in this one. You couldn't lower you couldn't go back to the seller side and actually lower the purchase price on this one. In this one, we're just, dealing with, okay, the appraisal came in lower. We still have a $500,000 contract price. What do we do and how do we solve this? So in the second column here, you can actually bring in the extra money down to maintain 20% equity. So in this case, a 392 loan amount is what we ended up at, or what you could end up at, a 7.375% interest rate still. And then the monthly payment actually goes down to 2707 because the loan amount is going to be lower in this example. And then you can see the cash to close actually goes up to 108,000 in this particular example to do this. So that's definitely a strategy. If you have some extra cash, you can go ahead and keep doing that. And then the last column over here is what happens with the appraisal comes in at 490, but instead of bringing in extra cash, you just maintain whatever it is the down payment that you actually had. So if you look at the first column, $100,000 down payment, that's the amount of money that you'd have to bring in order to make this last strategy work here. Okay, so appraisal comes in at 490. We're looking at the third column here. Funny enough, interest rates actually go down sometimes when you have mortgage insurance. So in this case, the interest rate went down by 0.1% to 7.25%. And you can see that our monthly payment ends up being $27.88. It's $26 more than our original price that we were trying to determine here to figure out if this is going to work or not for a monthly payment. Now, I did have to factor in some mortgage insurance. This person had, in particular, very good credit. So mortgage insurance is very minimal, especially when you're still maintaining, 15 to 20% down. Not very much in terms of mortgage insurance for this extra cost here. So you can see $27.88 was the monthly payment. And then the cash to close is the only thing about this software that's not perfect, is actually still $100,000. So even though it says 90 in there, it's actually $100,000 because we still have a purchase or a contract price of 500K, but we maintain the same loan amount of 400K, just like we did in the original example there. So as you can see, there's a couple different ways that you can mitigate a low appraisal. Now, as properties start to decrease in value, which may or may not happen, I don't know, over the next couple of years, this strategy is going to come back into play more and more and more. So if you're somebody out there that is dealing with a low appraisal and you just can't figure out how to dollarize it, and you're working with somebody, some online lender or something, and you need to figure this out, hey, reach out to me. What I'm going to do is I'm going to put my calendar link down below. And you can click on that calendar link, schedule a time with me. We can talk about the appraisal gap that you're in or that you may face going forward. I always like to have multiple options for clients when they go into a purchase situation. If we have multiple options, I always want to make sure that there's two options. So we have a backup option just in case something like this happens where the appraisal comes in low. What do? We want to be able to mitigate that before, that actually happens in the process of buying a home. That's a lot less stress for everyone. Okay, so calendar link down below. Click on that. Love to chat with you about this strategy. And thanks so much again for watching my videos. I look forward to chatting with you on my next video. Have a good one, guys. Bye.